video. Hello and welcome to another video. Today we'll be looking at a strategy you can use to trade Forex on the 4-hour time frame. Okay, on the screen I have AUD CHF 4-hour time frame. Okay, I have some indicators and I have about 4 windows. Okay, I have about 4 windows. Okay, let me try and put some okay, like this is the main window. This is the main window. This is the main window. Then I have indicator window 1. This indicator window 1. I have indicator window 2. This is indicator window 2. Okay, I also have indicator window 3. All right, that's indicator window 3 for this particular strategy. Okay, let's look at the settings. If I proceed, let's look at the settings. Okay, how the indicators are loaded. Okay, I have on the main chart I have moving averages, right? On indicator window 1 I have stochastic oscillator. On the indicator window 2 I have relative strength index. On indicator window 3 I have relative strength in the index, some moving averages, and an Ichimoku indicator. Now for the main window, the first moving average is of period 5. All right, the method is linear weight applied to I, color is red. The second indicator is also period 5. Method is linear weight, this time around applied to low. The initial one is applied to high, but this particular one is applied to low, color is still red. Then the next moving average, we have period is 20. Method is simple, applied to close, color is dark orange. On the final indicator on the main window is the period is 16. Method is simple, applied to previous indicators data, and the color is turquoise. Okay, now for indicator window 1 we have stochastic oscillator. Okay, stochastic oscillator, the percentage K period is 5, percentage D period is 3, slowing is 3, price field is low over high. Okay, method is simple. The main color is light sea green. The signal color is red. For the levels we have 20, 80, 72.5 and 27.5, and the color is silver. Okay, now for indicator window 2 we have relative strength index. The period is 3, applied to close, and the color is Dodge blue. Okay, for the levels we have 80, 75, 50, 25 and 20, color is silver. Okay, now for indicator window 3 we have relative strength index. The period is 5, apply to close, color is red. Okay, no level. Then we have moving average, period is 50. Method is exponential, apply to first indicators data, and the color is magenta. The next moving average period is 100. Method is exponential. Apply to first indicators data. Color is blue. And the next moving average period is 200. Method is exponential. Apply to first indicators data. Color is green. The last indicator we have Ichimoku. Tenkan Sen is 9. Kijun Sen is 26. Senkao is 52. For the colors, we have Tenkan to be black, Kijun black, Chikao black, up Kumo gray lime, and down Kumo red. So that's that for the indicators. Of course, the background of the chart is black background, and this particular currency pair is AUD CHF. Okay, so how does this work? Okay, what happens is on the main window, for you to have buy signal, the candle, the price is in form of line. Okay, not in form of candles, but in form of line. If I'm going to put it in form of candles, I could change it to this, but for this strategy to be in form of bar chart. Okay, now once the price cross above the orange and the blue moving averages, like you have a cross here, there's like a warning signal that price, you must have the development of a bullish trend. Okay, if crosses above, bounces above like this, you have developed of bullish trend. Look for buy. Okay, apart from that, when the orange moving average crosses above the blue moving average, that's also a signal to look for buy. As long as the orange moving average stays above the blue moving average, always look for buy opportunities. And as you can see, I'm buying, bought around here, and price is still going up. This is the 4-hour time frame. Okay, if we can change it to 15 minutes time frame, get something like this. Okay, but for the purpose of this strategy, we use the 4-hour time frame. Okay, so that's that. So for sell, that's the opposite of buy. For buy, you allow the price bar to cross above the two moving averages, and you look for buy opportunities. Also, you allow the orange moving average to cross above the blue moving average, then you look for buy opportunities. Okay, then for sell opportunity, like we have a bar here, by the time the price starts to develop below the two moving averages, then you look for sell opportunities. Okay, also if the orange moving average cross below the blue moving average, that's a signal for you to look for some short opportunities. Okay, for indicator window 1, where we have the stochastic oscillator, so I'm going to expand this. Okay, you look for buy when your stochastic and the red and the blue line gets to this point. Look for buy. Okay, look for buy opportunities around here. Look for buy around here. Look for buy around there. Like the lines are at the 72.80 level, and the price is going up, as you can see on the chart. So that's the time for you to buy. So by the time the stochastic lines start to approach the 72 level, prepare to buy. Like you have around here, prepare to buy. Prepare to buy. Okay, prepare to buy, prepare to buy, prepare to buy. So the opposite is for sell opportunities. Okay, you must establish that on the main chart, price has crossed down. Price has crossed down below these two moving averages. Price has crossed down and start to develop below the two moving averages. Apart from price crossing down, the 5 moving average high and low red moving averages also cross up with price, so they are above the two moving averages around here, so you can't expect to sell. In fact, this is a bullish trend which starts around here. So as at that point, your stochastic line getting to the 27 20 cannot work, this cannot work, this cannot work, this cannot work, this cannot work, because the trend is bullish. Okay, but if the trend is bullish, then you look for buy opportunities here, buy opportunities, buy, as the lines approach the 72.80 stochastic levels, you look for a buy. I look to enter buy. Okay, so that's that for indicator window 1. Or for indicator window 2, you look for buy when the RSI line, the blue RSI line, when it crosses above. When it gets to the 75.80 level and attempts to cross above, you look for buy opportunities, buy opportunities, buy opportunities, like it is around here. And as you can see on the screen, price is going up. All right, look for buy opportunities. So around here, it tested this 75.80 level, retraced, then starts to go up. That's when, at this point, you look for buy opportunities. Check with other indicator windows. Check with other indicators windows to be sure you can enter buy. And so long as on your main chart, so long as the price is still well above the two moving averages. What do I mean by the two moving averages? I'm talking about the blue, talking about this blue and orange moving average, these two. Talking about these two moving averages. If we go to the indicator, the two moving averages, the orange is 20 period simple moving average. The blue is 16 period simple but previous indicators data. So as long as those two prices above price and the two red moving average, which is the 5 moving average, high and low. This is high. Okay, 5 linear weight high, and this is 5 linear weight low. As long as the two are above the 16 and the 20 moving averages, you can always cross check that the other windows are doing the same. Okay, if the other windows are doing the same, giving you buy signals, then you can enter a buy trade confidently. Okay, that is in the bullish trend. You must be sure and you must be certain that the bullish trend has developed, just like what you have around here. The development of bullish trend started somewhere around here. Okay, and look at how far price has gone, and it's still going up. Okay, let's look at the last indicator window. All right, for this indicator window, when the green, blue, and purple moving averages, when they start to go up above the Ichimoku, okay, that's your bullish trend. Okay, I can see them going up around here above the Ichimoku around here. Okay, so up around there, so this is a bullish trend. Down bearish, then up bullish. Okay, I'm talking about the green. Let's look at the settings. Talking about the green is the magenta, the blue, and the green. As long as they are above the Ichimoku, there's the lines. These are the lines. As long as they're above the Ichimoku, that's your bullish trend. Okay. Now the trigger is when the red line crosses above. If the red line crosses above, trigger to enter buy. The red line cross above, trigger to enter buy. If the red line dips below, that's your consolidation period. Let me zoom in so that you can see what I'm explaining. Let me zoom in. Okay, yeah, it's clearer here. So let me take some other shape. Okay, so this is your trigger to buy. It's your trigger to buy, trigger to buy. Okay, if it dips below these moving averages, these moving averages, as long as they are above the Ichimoku, you can buy at any time. You have a trigger up. Okay, the trigger is a trigger, but as long as it dips below, that's consolidation. Or if it goes up above, you can buy. Same thing for when to sell. If these three moving averages, if they are below this Ichimoku, that means you're in bearish trend. Now if the red line triggers down below the moving averages, and you can sell. So that's it. That's it about this strategy. It's a good strategy. You like it because it works. It works. It helps you to filter. It helps you to identify the trend first. Then it filters. The signal and tell you when to buy. Like you have a buy signal here. You have a buy signal here. You have a buy signal here. And the trend is already bullish. It's a bullish trend. So buying somewhere around here is perfect. Somewhere around there is a perfect place to buy. Okay, where you have the synchronization, where you have the alignment of all the signals, and you can see what happened. Price went up. Looking at another chart. Okay, price going up. Buy. All right, buy because you have signal across all the windows. And you can see the trade. If I take to a smaller time frame, see, let me put it on 15 minutes time frame. Buy, and price still going up. Trade is in profit. That is for AUD JPY. If you go to another trade, smaller time frame, this AUD USD. Buy. Okay. If you go to Euro AUD, sell. Let's take it to a smaller time frame. You can see sell. But if you go back to the 4-hour time frame, you can see the signals flashing. You can see the windows flashing. This is already a downtrend. This is a downtrend. Okay, it's a downtrend. All right, and you add your trigger. Add your trigger as soon as the lines touch the 27 stochastic level. That's a trigger to sell. Another trigger to sell is RSI touching the 2025 level. Another trigger to sell is the red line popping below the moving averages and Ichimoku. Okay, so that's that for Euro AUD. If you go to a smaller time frame, you see what price has done. Price sold. Trade is in profit. Let's go to Euro NZD. So selling. On the main window, looking at the 4-hour time frame, on the main window, we have our trend change somewhere around here to bearish trend as the price drops below the 2 moving averages. You also have the orange moving average crossing down below the blue moving average around here. And you can see the 2 red 5 moving average lines, 5 period moving average lines, drops below the 2 moving averages with price around here. You can see what price is doing, still going down. Your trigger for indicator window 1 will have been somewhere around here. Your trigger to sell for indicator window 2, the trigger to sell will have been somewhere around here. Okay, and then you can clearly see the red line. You can clearly see the red line dropping below the moving averages around here, while the moving averages are below the Ichimoku. As long as the purple, blue, and green moving averages are below the Ichimoku, that's a bearish trend. Your trigger will be when the red line pops below the moving averages. Like here, a trigger Here a trigger, here a trigger to sell. Okay, let's look at GBP CHF buying. That's a smaller time frame, you can see buying. So it's a very simple strategy. You can use it to trade forex. This MT5, this chart is MT5, so you can use it to trade forex. You can use it to trade synthetic indices like volatility 75, boom and crash. Another asset, you can use it to trade gold. You can use it to trade Nasdaq. Okay, it tells you the trend. If price is trending, it shows you. If price is ranging, it shows you. If it's ranging, you won't see the blue. You will not see the blue and the orange moving average. You don't see the blue and the orange moving average going up or going down. It will just be flat, okay, in a straight line. All right, but if it's trending, it will cross over, just a crossover, and then start to go up. You can see a crossover happening, right? But like a fake crossover, a fake out, and then it starts to go up, and you can see price is going up. And the indicator window 1, 2, 3, you can see price. The indicators are also ticking up, telling you to buy. All right, so that's that for the strategy. Make sure you click the subscribe button, subscribe to the channel, like our video, click the like button. Also click the bell button below the video to subscribe, to get notified when we release the next video. Don't forget to drop comments. Don't forget to ask questions if you're not clear with any part of the video. You can also go to our website, www.binfxtrader.com, to learn more on our strategies. You can also go to another website of ours, fxfables.com, to learn more on our strategies. Till I come your way next time, it's for now.